Hi everyone, welcome to the accumulation data analysis for 31st of May. So today we'll look at what exactly happened in today's trading as well as what exactly is the data predicting. What do the big financial guys think that the exit polls or the results will be like and how they have positioned themselves, right? So let's get started. We'll first start with the India VIX. So the India VIX, it actually went up a little, like 2 odd percent or a little less than 2%, but it stayed there itself. So like I told you, going into the exit polls or the results, it would be around that 24-25 mark. So it is pretty much there, right? So nothing to be really worried about looking at this particular number, that is the India VIX. Now, very important thing, the stock market is a discounting mechanism. What exactly does that mean? So what this means is probably the most favorable outcome of this election is already discounted in the price, right? Because only if there is a surprise element, the probably the market will react. But if there is none, probably it has already discounted. So in that case, we might even see a reverse reaction, that is the market might start correcting as well, because a lot of players would have started buying the market, thinking that okay, the same ruling this thing government is coming back and the market should rally, right? But probably 99% chance that the market has already discounted that news and has run up into that, going into the election, right? It has already run up because it kind of predicted the same thing, right? So three outcomes possible. One is the same government comes back. I don't see any great move on either sides. Maybe some selling pressure might also come in if that happens. Second is, if the government comes up with 400 plus seats, that is two-third majority, would make it easier for them to pass bills and stuff. The market is definitely going to like that, and probably a 10% move on the Nifty is also possible, right? Third outcome, the ruling government struggles to cross the halfway mark, in which case probably the market is going to have a deep correction as well, which is very unlikely, probably less than 5% chance of that happening. So 90% chance, or let's say 80% chance of the same government coming back to power with similar, or let's say plus or minus 20 seats. 15% chance they cross the 400 mark, which will make the market run probably, let's say, 10%, 5 to 10%, and 5% probability that they come with less than the halfway mark, wherein we might see a decent correction in the market as well. So this is my take, because this is what the data is also kind of predicting. No major bump up in the accumulation, neither it was too bad, suggesting that there is a change in government, right? So we'll just look at what the market did today. So this is Dow Jones as per yesterday. Things are not looking great for the US economy as of now, and even there are prediction that the second quarter, that is consecutive quarter, might see a cut in the forecast or the growth rate, that is the GDP, which usually suggests that there is a recession in the US market, right? So if this double top is made and then we crack, probably we go much lower for the Dow. If Dow cracks, all the global indices also crack along with it. Now coming to the Nifty analysis. So intraday, just a flat day before the exit polls, nothing much happening here either, right? We closed around the same levels where we ended, probably 20 points up. So on the daily charts, you see a huge volume. Even in the previous slide, if you see, there is a huge volume in the last 30 minutes. That is because of the MSCI rebalancing that happened, right? Usually whenever there is a MSCI rebalancing, in the last 30 minutes crazy trades happen, and we usually tend to ignore data on these dates. So we are not going to be including that data in our analysis, because that has nothing to do with the election or the exit polls. It is just because of the MSCI rebalancing that happened that we see such crazy volumes coming in, right? So Nifty around the same levels, probably a spinning top kind of a candle, which is indecisive, a neutral candle. right? So the large cap data we are not considering today, so we are going to ignore this. So the best performing sector today was the real estate sector. After doing a retest of the breakout, it has again moved up more than 2%. It was up today. Now coming to the Bank Nifty also a spinning top kind of a candle after moving up a little. Nothing great here either, going into the exit polls. Now the mid cap analysis, the mid caps, it kind of did a retest and gave us a hammer kind of a this thing, right? Not really, I mean, kind of indecisive, I would say, although the wick on the lower side is kind of longer than the upper wick, but still quite indecisive. We are not going to take the data for today, so the accumulation data I'm not updated for today because we are going to ignore it. And the distribution also we were not going to include it because crazy volumes that are coming in the last 30 minutes, right? So the small cap analysis, the small caps, again here you are seeing a indecisive candle, more like a doji or a spinning top that is formed. So even here there is no real strength that is there. So this is the main reason, like I sold all my short-term positions, because you never know what the exit polls are going to come out with. If it is like, let's say, a similar one, you might see a reaction wherein the market starts going down also, or the volatility would be so much with the VIX at 425 that it kind of triggers the stop loss. So that was the main reason why I closed all my short-term trades today. I even tweeted about it. So that was the main reason. Going into the exit polls and the election results, I have closed all the short-term position. No point kind of being in a trade wherein the volatility is so high that it is moving like 5-6% up down on the same day and triggering the stop loss, right? So this is what I feel. Even here I'm not including today's data because it would not make any sense at all. So net I feel similar results like what we saw in the previous elections, wherein the market might rejoice for a day or two, probably up 1-2%, and then it's going to be the same, right? We are again going to focus back on global growth, global tensions that are there, right? Because India is pretty much going to grow at the same pace unless there is a global collapse that is happening, which I feel is going to happen in the second half of this calendar year itself, as US economy goes into a recession. Although China, people are hopeful that China is recovering, but the Chinese recovery is based on the fact that US is going to keep on importing stuff and China is going to produce more. The industrial output for China is going to increase, which I doubt will happen if the US goes under. Hopefully this helps. Probably I'll see you after the Monday's data, once the exit polls are out and how the market reacts to that, and are the big guys again buying. If there is any surprise element, probably they might again put in fresh money on Monday. So let's see, let's wait for Monday's data and see. As of now, I feel similar results to what we saw in 2019. Hope this helps. Thank you.